Welcome, YouTubers, to another episode of Jack of All Trades. We are very excited to announce that Brandon is going to join the team permanently. And I'm very excited for this because he gives us a much-needed third perspective from the institutional side. So with that, Brandon, you want to lead off with the S&P tips this week?
For sure. Well, we saw some big moves in the market this week as all North American major market averages reached all-time closing highs. It was the Nasdaq 100 that led the way. It was up 3.8%, and that was largely due to tech reasserting its dominance. Meanwhile, we saw value, epicenter stocks, and energy names sort of take a back seat as they consolidated their year-to-date gains. Now, if you were to ask me why the market was so strong this week, I could lead you in a multitude of different directions. We could look at a pullback in bond yields. We could look at a series of really strong economic data. But in my opinion, it's all about the market sentiment. We're seeing a shift back to technology and growth stocks, and risk sentiment is back on. This is really positive for the market because these are the elements in place that you want to see for the market to really move. So let's look through the S&P 500 components, and we can really see why that is. So Sam, if you could just pop up the S&P 500 data.
Here we go. So these are, you see that?
Perfect, great.
Yep.
So Apple, Microsoft, Amazon.com, Facebook, two classes of alphabet stock, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson, and Tesla too.
Yeah, look at that. Were you saying earlier that they're overweight, like those guys are what, 25% of the index?
Yeah, so you take the 5 top names on the S&P 500, and those names make up over 20% of the index. So when those names do well, the S&P 500 is a beneficiary of that.
Man, that changes things. Because like S&P 500 used to be like a pretty good snapshot of the overall economy, but with these guys being so overweight, you think that's changed a little bit?
Mm-hmm. Definitely. Well, if you look at the performance of these 5 names, I got them right here. It's market moving. We got Apple up 8.12%, Microsoft up 5.6%, Amazon up 6.7%, Google up 6.6%, Facebook up 4.6%. Again, this is market moving. This is big tech reassuming leadership. And the great thing is these breakouts have just begun. Apple and Amazon have yet to hit all-time price highs. And when they do, they're going to be explosive.
So we got the S&P pulled out over here. Get rid of this line.
Perfect. And it's just a blue sky breakout right here. It's in the first week. And if you look at the Nasdaq 100 had an all-time closing high. And I think it's setting itself out for a really nice week.
Wow. So you think the market's fully recovered now, eh?
Well, if you look at what we're having next week, we have the start of earnings season. We have U.S. banks kicking it off. We got JP Morgan Chase. We got Goldman Sachs and Wells Fargo reporting on Wednesday. And we have United Health, PepsiCo, and Delta Airlines reporting as well next week.
You know, I want to ask Kaylin this. If you look at this chart, and I didn't tell you this was the Nasdaq, would you trade this, or how would you trade this?
I mean, to be honest, like just if I was looking at it like that, I would say that's basically looking to get going parabolic right there. Like it kind of consolidated for a bit through, what is that? Are those weekly candles there?
Yeah.
So yeah, like last July to like the end of the year, kind of was like, say, a consolidation phase. And then you got that little perk over new time highs there, consolidated for looks like maybe another month or so. And you get that next rip up, which we're in right now. So that's the kind of thing, like to me, I mean, you know, if that was kind of like a 3-minute candle or something like that, that's the sort of thing where I'd be looking for that move to push up on really high volume, really fast, and then exhaust, and then you get that pullback. So it'll be interesting to see how that plays out on the index.
Yeah, so as a technician, I mean, you usually want to see when you have a breakout, you want to see a change of polarity. You want to see resistance turn to support. So I wouldn't be surprised at some point if we do have to retest. But in my opinion, that's a buy on a silver platter.
Yeah, it's going up in decent volume too, at least the rising volume. So you know it's not too fake. Same thing with the S&P, looks like.
Yeah,
and you can pop up any chart up there. Sorry to interrupt you, Kaylin.
Yep.
If you can pop up Facebook or Microsoft, this is just a perfect example of why these breakouts are just in the early innings. You'll see it's the first week of the breakout. And we know that the beginning of the breakout is always the most powerful.
Look at that. That's
So
a
how
strong
do you read
beginning to the month.
As Brandon, as far as like volume and stuff goes, because I know like when I'm trading, like when I'm swing trading stocks and stuff like that, looking for breakouts, like I want to see those breakouts on significantly higher volume. Is that a little bit different when you're looking at indexes? Or
Oh, you always want to see volume. Volume confirms price. What I would say to this is it's really technical and analysis kindergarten, I would say, is you would measure the point of breakout and you would measure that to the next consolidation period. And that's how far I would see the next move going. So I did that on Amazon. I can see Amazon going to like 45, 5,000, 6,000. Really, sky's the limit.
Okay.
Look at that.
Yeah.
That is a very standard breakout from Ascending Triangle. This is beautiful.
The other thing that you can do, and me and you, David, did this the other day, was we put Facebook and I believe Alibaba into log form, and we saw just a perfect parallel channel just going up over like, I'm going to say a 10-year period.
Almost everything I look at is in log form. So just from a purely technical standpoint, from this breakout for Facebook, the price target's about just under $340. It's got about 8% upside. So that's exactly where the target would be for Facebook. Wow. Wonder if it's like that for anybody else. This is Google. Holy crap, look at Google.
Yeah, Google's been, it's been a stealth move. It's been performing so well lately and it's not getting any credit. I think Google may be the most underloved FANG name. What do you guys think?
Well, I mean, the stock price is showing a lot of respect. I mean, investors looks like they're giving them some decent respect.
But do you see that almost, I want to say that's like a 2.5, 3-year consolidation from, what is that, 2018 to like 2021?
Yeah.
Yeah, I know Google has more traffic than any other tech company in the world too, doesn't it? Like as far as online, like websites and stuff like that.
Well, they own Google and YouTube, and those are two of the biggest websites that I can think about.
Yeah, I remember listening to a thing, I think it was Elon Musk, and he said the only company he doesn't try and compete with is Google.
At this point, Google is basically the index for the internet, right? So like, how do you mess with that?
I would say Google and Facebook, especially when it comes to advertising. Facebook is an advertising behemoth. The interesting thing about Facebook, I saw a prominent analyst say this. He said, if you take Instagram and you look at its revenues and you put the same multiple that Snapchat has, Instagram is worth more than Facebook itself, which is interesting.
I agree.
Facebook owns Instagram, WhatsApp, and a multitude of other things.
Yeah.
So that's what I'm. No, sorry. Go ahead, Ken.
No, I was just gonna say, like, how does all the Facebook like hacks and stuff like that tie in with it? Like, David, I know you posted about that like recently story. I saw that, but it's not the first time it's happened, and I know Facebooks tend to be really bad for that, for posting bad content and having hackers and people's data lost. Like, is that really effective?
I call it the Mark Zuckerberg discount. And this is why I think Facebook is so cheap. You had Cambridge Analytica. You had all of the drama of the previous elections. You have all of these hacks and everything else. But at the end of the day, that's not a reason not to buy Facebook.
Yeah. No, I understand that. I was just kind of curious if people are like getting nervous about it.
I think that nervousness.
Do you guys have Facebook?
Yep, we own Facebook. We're a big holder of Facebook. It's a great company. Yeah.
You know what? I'm very curious though. I wonder if the government's going to do to Facebook what they did to Microsoft those decades ago, which is break them up. Because I would love to see Instagram split off from Facebook, because Facebook is dead weight in my mind.
Yeah, honestly, like just from a personal level, the only reason I have Facebook is because a couple like my grandparents are on there. Otherwise, I wouldn't even have it.
I haven't updated my Facebook profile picture since 2015.
Yeah,
I know.
I think I go on Facebook maybe like once every couple months just to look quick, and then I'm out of there. Like, I use Twitter for news and I use Instagram for like to keep up with all my friends.
Yeah, I think Facebook. Sorry, go ahead, Brendan.
It's an interesting point that you brought up, though, David, about breaking up some of these big tech companies, because we've been hearing that from a lot of the politicians for years, and it just never happens. And especially now we have a Democratic administration now, you would think maybe that would be one of their policies, one of their things that they would get going, but it just doesn't seem like that's going to happen, at least at this point.
Yeah, well, to be fair, Biden's got a lot on his plate. You might see it in year 2 or 3. But my thing is about Facebook is that Depends on how much Facebook funded his campaign. let's be real about that. But no, I was gonna say, like, I viewed Facebook as a missed opportunity, because I remember about a good 6-7 years ago, I thought Facebook was gonna be forever, because the way I viewed it was that Facebook will become the digital diary of our lives. Because can you imagine us in our 60s and 70s? We log into our Facebook account. We can not only see photos we posted decades ago, but conversations we had with friends. Like, how cool would it be to have that resource?
It's
That's
like the
priceless.
ultimate digital archive. It really is.
Right.
And that's how I view Instagram more so.
It's priceless, but then somehow along the way they just lost that thing that makes you want to use it. It's become a dump for arguments and propaganda, and it missed opportunity.
Yeah, I agree with that 100%. That's why I don't have very many people on Facebook. I don't follow any pages because it just seems like it's all scam, all advertisements. Like, it's not even really that user friendly. Like, I've even tried to open business pages on it, and it's just not a user friendly platform for any of that kind of stuff, I find.
Well, the interesting thing about the e-commerce on Instagram, they are growing their sales 80% year over year. 80%, 80.
Yeah. Is what's someone call it? TikTok. The Chinese version of TikTok is so much more powerful than the US version, and Instagram is actually behind, because I have the Chinese version, right? Like, you could post a photo up and link it to your store, and you could just sell whatever product that you want. Like, they commercialized the whole platform. It's amazing.
Yeah,
I think Instagram's missing an opportunity.
Instagram has that too, though. Like, a lot of the pages you can follow on Instagram, like business pages, people that sell clothing and stuff like that. You can open up the picture and click on the picture, and it'll say the price tag. It takes you right to the website, right?
Yeah, they have the functionality, but what they're doing is they're making it closed to most users. You have to have a certain amount of following. You have to say that you're a business. You have to pay, right? Whereas, like, the TikTok version of China seems to be less restrictive. Like, you could be almost anybody. You just want that function there. Let's put it on.
Okay. Yeah, that would make more sense, especially if you're a starting business, right? Then you can use that feature right away. It's like for me, like when I was doing my personal training and stuff, I couldn't set myself up like that on my Instagram account, which is kind of a big hindrance factor. That's why I started doing it all. But then, my dog has like 30,000 followers, so he's a business technically.
Well, I think Facebook's making a big push towards this with Facebook Shops, their deal with Shopify. I think maybe it's taken a little bit more time for that market penetration, but I'm definitely seeing it.
Mm-hmm.
Yeah. But Caitlin, what did you see in the markets this week? I know you mentioned this was such a bad week.
Yeah, it was like, this is the first week in, I don't know, probably like over 2 months that I didn't make any money. It was just like, it was really, really slow. I mean, it was just like, it seemed like everything just dried up, like nothing was moving. I mean, like, normally when I do my scanners every day, I'm getting like, 15, 18 stocks on my scanner. And like, there's generally maybe 8 or 9 or 10 that look pretty decent that I can kind of dig into. And this week I'd get, maybe 10, 11. And there was like, I was sending you guys my watch list. There was maybe like 4 or 5. And even out of those, there was only maybe 1 or 2 that I was really half interested in. So it just seemed like there wasn't a lot of like, cause I play smaller cap stuff, right? So I'm playing all like, the smaller accounts and like retail traders and stuff like that. And it just seemed like a lot of people weren't really like looking at the markets anymore. And that is kind of like typical. And, in those markets that I play is once you get into the summer, a lot of it kind of dries up a little bit because I think a lot of traders go on holidays, like a lot of people work and stuff like that. So generally the summer months are much slower than the winter months, but like it seemed like it just dried up like within a week. It was pretty crazy.
Well, I do love your strategy, how you look for those gap ups and you try to trade that gap fill.
Yeah. It's like the patterns I play, I have basically 3 trades that I do, and that's all I play. So I'm looking for really specific things because I know what works and what doesn't work. And that was the problem this week is I was looking at stuff and like, some days, I don't trade all the time, right? If there's nothing there, I'm not going to trade. But I made that mistake twice this week and it just, I got burnt by it. But
you know what? I'm going to give you so much credit for that because I tend to trade when I know I shouldn't. And we'll talk a little bit later about my PTSD.
Well, it's like what I said to you, Kaylin. I said, if there's no waves, you don't got to surf.
Yeah, that's the biggest thing, right? I mean, like that's why I do so much reading on psychology is because I'm such a strong believer that psychology is the most important thing if you want to be a good trader. I mean, like Absolutely. All 3 of us, I think we could probably agree that, you can show anybody who's never seen a chart before basic support and resistance. And yeah, if this breaks, you short here. If this breaks, you buy there. I mean, that's very straightforward, but it's being able to do it in the moment with your own money. And, if it whips back, not getting scared out. I mean, just like, if you lose 6 days in a row, maybe it was just 6 bad days in a row, but maybe that pattern still works, right? Like I've mentioned before, let's say you have a setup that works 80% of the time. That doesn't mean that you're gonna make 4 trades that'll work and then 1 won't, and then 4 will work and then 1 won't. It could be you could get 10 that don't work in a row, and then you could have 50 that work in a row, right? So it's just that mental abuse you're constantly taking, where it's like, okay, am I doing something wrong now all of a sudden, or is this just a bad string of that setup, right? It's just
emotions can be extremely powerful, especially in the heat of the moment.
100%.
So you really just have to adhere to your discipline, and if you see the opportunity to trade, then great. If not, sometimes you just got to walk away and call it a day.
Yeah, exactly. That's the biggest thing that people, that I always tell everyone too is, it's better to not take a trade than to take a loss. It's a lot easier on your mental capital. And you hear that a lot. I mean, any of the guys that trade a lot, they say, oh, I made X amount of dollars today, but I burned up 1,000% of my mental capital. And some of the guys will take the next day off because you're just like, you just get fried. I mean, I was talking to David about that too, like back when I could, I'd look at the monitors all day, and like by the end of the trading day, if I'm watching the markets for a whole session, like I'm just like exhausted. Like granted, I didn't really know what I was doing back then, so it was kind of a little bit more stressful, but I'd have to sleep for like 2 hours in the afternoon. I'd be more tired than doing a 12-hour shift at my regular job.
Yeah, there was this one trader I was listening to a while back. He was like saying like, the only time he'll trade is that he'll wake up in the morning. He's got this checklist of things. He's like, did I get enough sleep? Am I well rested? Am I stressed? Is there anything else that's bothering me? And if all those components are there, then he'll look at the chart and trade. Otherwise, he's like, I'm not going to be right.
Yeah, exactly. And that's probably the toughest thing, because you got to go through that huge learning curve when you're first starting out. Is like, what is a good trade? What isn't a bad trade? Because when you first start, like, you don't know what you don't know, right? When you get better, you know what you don't know. So you can look at something after you've been doing it for a while and say, okay, I don't know what I'm looking at, so I'm not going to touch it. But when you're new and you don't really know what you're looking at, then you don't know. You could look at it and you don't know if it's a good trade or a bad trade, right? You just got to learn. But it's definitely a long journey to get to that point. And once you get to that point, like I said, I mean, I've made money every week for 2 months. This is the first time I didn't, and I know exactly what my mistakes were. I mean, I like every time I take a trade, I write a little summary on like what my suggested entries were, what my exits were, like what I was thinking. Like I have, hundreds of those for every single trade I take. And I just went back and read them, and both the entries from both trades were almost the exact same. And I was like, I literally just made the same stupid mistake 2 times in a row.
I was just going to ask, so it's from making a mistake, not just stopping out just because the price wasn't doing what you wanted to.
Yeah, so I still stopped out. Like I didn't, I was basically break even. Like I didn't really lose any money.
Yeah.
So I always still I always still play with really tight stops, but it was just a matter of, I was just getting too like overly excited basically, because the markets were so slow for so many days. Normally if it's like one day, it's like, okay, whatever, not a big deal. But you go for a few days in a row when you're not seeing anything, you feel like you're like, oh man, like I want, like, I mean, at the end of the day, we're just like, we're degenerate traders. we like to trade. So
a little bit.
Yeah,
I have to admit that.
Yeah.
But to that point, like you're saying, you're seeing the market slow. I know, Brendan, we wanted to talk about this article. Sam, if you could pull up my screen here. Jeremy Siegel was saying the stock market could go up about 30% before the boom ends. Yeah, I found that interesting.
Well, let me just say, I have a ton of respect for Jeremy Siegel. He's a professor at the Wharton School of Business. He's a PhD in economics. He's written some of the greatest investment books. And it's always a pleasure to hear his views. He has a really great pulse for things, and his track record over the years has just been phenomenal. So in this article, he's basically saying that he sees a really strong bull market forming for equities, and he sees the economy picking up as the reopening takes hold. He's predicting 30% upside for the equity markets. I'm assuming he's talking about the S&P 500, which is just incredible because the S&P 500 is already up high single digits year to date. So I definitely think that could happen if the names that are really heavily weighted in the indices, the names that I talked about earlier, if they start to continue to lead the rally. At the same time, however, he does see some inflationary pressures starting to take hold. However, he sees the cost of borrowing not going up as much. So he's urging investors to invest in real assets like real estate, like stocks, and he's increasingly bearish on bonds. So the bottom line of this article, he says, enjoy the ride. It's going to keep going. And Jeremy, I'm with you, man.
So he's calling for 5,000 S&P.
5,000 S&P. That is one of the boldest targets that I've seen.
Wow.
And it definitely could happen. It could be a piece of cake, actually.
I mean, the way things have been going.
Does he have any projected like time frames on this, or that's just what he's thinking?
He's saying by the end of the year, and then he's saying after that we may see a 20% pullback due to maybe the Fed not raising interest rates but tapering their balance sheet. But he was further saying that would be an amazing buying opportunity. So if that does happen, you want to be there. You want to be there buying that dip.
Yeah, 100%.
You know, I think I've mentioned this. Kayla and I have had discussions about this in the last couple of episodes where I was talking about going more in cash. Because I remember, just from a pure technicals, I was looking at the S&P. Remember that there's that one night where I studied like 100 years worth of the S&P, and I'm like, we might be due for a pullback.
I remember that.
Right? So I'm like, it's amazing that he's giving support and details on how that could happen. But I definitely want to be more in cash now.
For sure. Well, there's always a correction that's looming. There's always one. I mean, the market's cyclical. But if you sell now and you miss out on 30% and then the market goes down 20%, you're still underwater. So that's why I would rather not time things, and I would just load up on the names that you're the most bullish on, and always have a little bit of dry powder.
Yeah. I mean, I was loading up on the dip actually. So I'm sitting. I just looked at my portfolio yesterday. Between all my portfolios, I'm about 10% in cash, and so I want to be more comfortably in like around 30% in cash, because I mean, with everything that's going on, it's so hard to predict. Like talking about the markets, like I've never found it. I don't know if you've seen the same, Caitlin, but I've never found it so difficult to track the prices of any asset. They're just being bipolar. It's very wonky.
Yeah, I think that still just has a lot to do with that retail trade and stuff. Like what do you guys think as far as this? Like when we do get that 20% pullback, say it is that an economic pullback, or is that just a correction? Because the March pullback we had last year, that was just pure panic from the coronavirus. That really wasn't an economic.
You rarely see markets sell off with that magnitude that we saw in March. That was truly a once in a lifetime correction. I thought that the correction at the end of 2018 was really powerful in magnitude. If you remember that, David, that was just that was really, really painful. And that was right after Powell said we're a long way from neutral. And then he reversed course. He did a 180. He went in the other direction completely. And they brought interest rates essentially to near zero, even before we even knew what coronavirus was. So to answer your question, Kaylin, I don't think it's going to be an economic. I think it's going to be more like sentiment. Like if we do go to 5,000, how many new buyers are going to want to, enter their positions at that level? And then you may have a lot of people that are in profit. When a lot of people are in the green, a lot of people want to profit take, and it's just sort of cascades down. And that's what causes a sell-off. But at some point, there's that level that people start buying because they anchor themselves to these levels. So I think it's just going to be profit taking, lower high, higher low type thing, like something like this. But the market's just going to reassume the uptrend. May take a couple of months for the market to reset, but eventually we will eventually see higher highs. I mean, it's the market. We believe in America.
Yeah, that makes a lot of sense. I mean, that's the same kind of mentality that I use in my trades as well, because I'm trading, lower price stocks. And if you're getting something that's going to new highs, like, let's say the stock's at $7 or $8 and, it's breaking out, $10 is kind of the next area of interest if there's no other support and resistance, right? Because it's just that mental number, right? $10 just kind of looks like that's a good spot to get in. And more often than not, it kind of works. And then after that, you'd be looking at 15, 20 and so on and so forth, right?
Yeah, it's all psychological, and people always anchor, I bought at this price, so if it goes back to that price, I'll buy there, and I sold here, so maybe I'll sell again when it goes there. Like, people always use that mentality when really they're just arbitrary numbers. And that's why when you see gaps usually occur in the same region because there's not enough people that have made that mental note that know, oh, like it never traded from 17 to 19, so I'm not going to buy there. I'd rather buy it when it breaks 20. So it's all psychological, and it's just numbers.
Yeah, that's a really good point. Actually, I was explaining to one of my friends the other day just about like basic support and resistance, and I think we were even talking about that in our podcast a couple of weeks ago, David. Is, you know, just when you're drawing your levels and stuff like that, or if you're looking at numbers, even indicators, you know, like the moving averages and stuff like that, the reason certain ones work isn't necessarily because they're great indicators. It's because those are the ones that most people are using.
Yeah.
Same with support and resistance levels. You want to look at those levels that are really, really crystal clear, because if you're kind of trying to read between the lines and say, oh, maybe this is a level, maybe that's a number, odds are not a lot of other people are seeing it. So it's going to hold less weight. So you want to look for those things that everybody's going to clearly see, because those levels will hold the most weight.
Yeah, it's just basically mass psychology, right? But what makes it interesting is that when something becomes too obvious, then you start to think, shit, are people going to front run this thing? Right? It becomes more interesting to play.
It probably depends on the stock, right? And something that I would play, I would say maybe, but I don't know how that would work on the broader markets.
Well, look at
with the broad markets, it's just too efficient. It's just too liquid. I don't think that would happen. You have all these high frequency traders and different institutions and retail guys. There's just too many players and too much volume.
Yeah.
So I wanted to ask Kalen, now that you mentioned the psychology thing. So I've basically taken a break from trading Bitcoin futures because they whooped my ass for the last month. Like I exited March about even with what I started, and that doesn't sound so bad, except there was like a 24-hour period where I literally just went on tilt. Like I was way down, and I took a few trades that was just stupid. There weren't even trades; they were just gambling, right? And it happened to flip my way, and that's the only reason I ended up even. And so after it flipped my way, I ended up even. I'm like, I'm just gonna like just hang back. You know, I've got like, my problem now is like my confidence is broken. I'll see a play, I'd be like, I won't do it, and it'll play out. And I'm like, fuck, you know.
Right.
And I know you read a lot of books about it, so I don't know if there's anything you could tell me to help me out, or.
I would say first thing you want to do is just have a green day. Like after you have a couple big losses, or even one big loss, or you're feeling a little bit like not confident, just aim to make literally $5. Like if you walk away the next day and you have a green number in your account, just mentally, that's going to feel so much better. And then you can go into the next day saying, okay, you know, that trade is working. You're going to have no emotion attached to it because you're going to be risking nothing compared to what you usually do. You make that $5, and that's going to validate that you still know how to trade. And then the next day you can go back in, and whether you go right back in full size, maybe you jump up to half, you know, the progression can be relatively quick because you already know what you're doing. But biggest thing you want to do is just be green the next day. That's from my experience anyways, and everything I've read, that's so important. It's just a mental thing, right? Because I mean, you said it, like how long have you been trading Bitcoin, right? It's you know what you're doing. I know you know what you're doing, but you're just second guessing yourself right now. So just take the emotion completely out of the table, trade really, really small size, and just execute that pattern and make a buck. And then you'll prove to yourself that you know that you still know what you're doing. So
lower the size, but don't take time off.
I mean, you could take some time off if you're just feeling like mentally, you know, burnt out and exhausted. That's a different thing. But if you're just getting kind of stressed out about the trade, then yeah, I would say just go right back in and just get a green day.
Yeah, so I was thinking of because I didn't know what to do, so I decided to just step away and just like calm myself mentally a little bit. But making smaller trades might be the better idea.
I think that's probably the best way to go. It's really good too to like, you know, stand back and look at the big picture. I've heard it explained a couple times actually in trading. I thought it was kind of an interesting analogy, so I'll explain it for you guys. But they say, you know, in trading, there's like three animals. There's the eagle, there's the donkey, and there's the mouse. I don't know, Brandon, have you heard this before? Yeah. You haven't heard of it? Yeah, no, I've heard this a few times. So basically, and you know, you can kind of tie whatever you want into that, but essentially, you know, they say there's the eagle who's, you know, you're flying over top of everything. You're seeing everything that's going on. You know, you're kind of looking for your odds, looking for the best areas to kind of focus your interest. And then there's the mouse, and the mouse is looking at all those really tiny details, making those quick decisions. And then those are your executions. And then there's the donkey, which is, you know, that's kind of where you need to go next, which is the donkey is just the workhorse, right? They're just you know, you just work, you just put in the hours, the boring stuff over and over, looking at charts over and over, reviewing things. So you need to know when to switch between those things. So in your normal trading, you know, it's described as you want to be the eagle to find the trades you want to look for, because you're looking at the big picture. You're hunting basically, and you want to find out where the best place to hunt is. You find the place that you want to hunt, and then you're the mouse. So now you're looking for that detail. You want to find exactly where you want to get in, where you want to get out, but you're still thinking about the eagle because you still want to not forget that big picture. And then, when you're running into issues or you're learning new things, that's when you want to be the donkey, and you want to just sit there and just put in those hours, those boring hours, just run through the data, review all your old patterns, and just go through the work. Because the consensus was that, most people are only the eagle and the mouse. They look at the big picture and then they look at the execution, but they're not willing to be the donkey for a while and just put in that boring work, hour after hour after hour, just reviewing all these things, because, it sucks. It's not fun. Like, we as traders, we like to trade. We like to make money. You don't like to necessarily sit there and just, read charts and just read numbers all day long. But that's the only way that you're going to move forward, is if you put in those boring hours. So I think in your situation, you'd kind of want to be in the donkey situation right now, where I would say just go back, review your trades, put in that time, and just look at them over and over. Think, what was I thinking? What are my executions? Do these trades make sense? Just look at your whole history for the past month and see kind of what sort of a progression you were taking. And that should give you an answer as to whether you were making mistakes or whether or not Bitcoin was just trading different to what you're used to, in which case maybe you need to learn because the markets are changing, or maybe you just need to wait it out until it gets back to what you're used to.
Yeah.
The other thing that I would do, if I can just pipe in here, and I think that's great, I would probably suggest that you do that and you just analyze your whole trading pattern and your tendencies and everything. But then at the same time, I would also take a week off. It's like, you guys work out a lot, so you guys know sometimes, you've been putting a lot of volume in, and you just take a rest week and just let yourself just relax, clear your mind.
I don't take rest weeks.
Let everything just kind of recalibrate, and then get back at it strong. I know it doesn't sound like fun. You don't want to miss out. The markets are always moving. There's always a stock to trade, and there's always some profit to be made. But sometimes clear your mind, and after a good rest week, you come back stronger.
Yeah, that's a really good point.
So you could really combine both of those.
My problem is it's like missing the action. It's just, I can't. It bothers me to feel like I'm wrong. Like I like something I no longer understand. It's like a little thing in the back of my head.
Long enough, you've booked a loss. Everybody has. Warren Buffett has. I have. You have. There's no one that has never had a losing trade. If they are, they're just a fool or a liar.
Yeah.
It's just it's been a while since I had like the streak of losing trades. Like, I'm just always on the wrong side of it. Mm-hmm. But the thing that put me on tilt was that a couple of the times I saw the price moving against me, so I'll stop out, and within 18 to 24 hours, it did exactly what I thought it would do. It hit my target. It would just do a little something weird before it, and it would freak me out. And there was like two or
what I would do in that case is, because that's something that I deal with, like the trades that I take, I'm always getting in a range, right? Like, shorting is kind of like where I'm at right now. So let's say the stock is, I don't know, it's around $3 or something like that. Then let's just say I'm going to put orders at, 320, 330, 340, and I'll stop out over 360. I know I've mentioned this before where, if the markets are really aggressive and there's a lot of volume coming in, I'll spread those out and I'll have to lower my size, right? So instead of going 330, 340, 350, and then stopping at over 360, maybe I'll go 330, 350, 370, and then I'll stop out closer to 4. But now I have to use less size because I'm hitting that bigger range, right? So it could be something like that as well. And on the flip side, if you are like David, if you are shorting and dip buying or anything like that, what you can do, I don't know if it'll work for you, is add once you have confirmation. So use a smaller size, maybe use 30% of what you usually do to get into the trade on a bit of a range. And then once you see it actually confirm that what you thought was correct, then you add in the other 70%. And then you're risking off that low or that high, which is now defined.
Yeah, I think you're right. Yeah, I think I did find myself taking larger positions and not sizing in like I used to. Yeah. I think you've nailed it. Especially
in crypto, I've noticed there's a lot of like bull and bear traps and false breakouts. Like you'll see something like, like you see like a nice breakout and then it does a breakdown out of some sort of channel, whatever. And then you get stopped out because you got your stops in because you're being a responsible trader. And then it just ends up just high volume, just going the other way.
Yeah.
You're just in disbelief. So I've seen that in crypto a lot. And I'm not sure if I trust the volume that's being reported on these exchanges. I really don't. I think there's a lot of like weird trading. Like I think the exchange is like, it's really, really strange.
I actually read an article about that. Something about 40% of the volume on crypto exchanges are fake. It's just wash trading.
Really?
Yeah.
And that's what I don't like about crypto.
Yeah, and I'm hoping now that with the Coinbase IPO, at least a good portion of the volume and those regulations will come into play, and it'll be less vulnerable to those kind of manipulations.
We're going to have to definitely cover the Coinbase IPO later to the date.
Yeah, I'm excited about that. Did you want to cover the NFT crash, or you want me to go into the semiconductor thing?
I would love you to go into semiconductors. Yeah.
All right. So I've been reading up a little bit about this, Sam. If you could pull up my screen. Well, there's a couple of things that I found that was really interesting. I mean, it clearly happened with COVID, and when that happened, the auto industry basically canceled all their orders for the chips, right? So the foundries are like, okay, well, let's shut down our businesses. But what's made it interesting was that it was the perfect storm of things that caused the demand, because you have not only did you stop production for 6 months, but you also have higher demand, like the PlayStation, like everybody wanted that. The crypto was booming, so everybody wanted video cards to mine.
Everybody was also rethinking how they were working, how they were living. I know a lot of companies had to invest in their digital infrastructure.
Exactly, like the cloud platforms, whether it's just data, sharing data, or like communications, they all needed more chips. Like it was the perfect storm of demand. And what I found was, so it used to take about 12 weeks from order to date of delivery for the chips. Now it's about 16 weeks. So we're about a month behind. And the problem is we only have 3 major companies that are making chips. There's TSMC, which is the big one. They're in Taiwan. Then there's Samsung and another one called Global Foundries. And so they're investing in Intel. They're a little small one, but they're investing in new foundries in Arizona. So Intel and TSMC are both opening up new foundries in Arizona. I don't know what is about that state that makes it conducive, but so they're building it there. The problem is those foundries take years to finish. So we're talking like 3 years ahead. So while demand's rising, the capacity to meet that demand is just not catching up fast enough. So there's talks that we could see inflation in the electronics because the chips are just not there. And then you already see it happening with the companies. Like Samsung said their Note's going to be canceled for this year. They usually release one every year. This year's canceled basically. Apple is saying their Macs are going to be delayed. So there's a lot of fallout that's happening from this. I don't know if you have any thoughts on it, how to play it.
I think it's just important to really emphasize how important semiconductors are. They're the building blocks of modern technology. They are used in products like automobiles, cell phones, computers, tablets, gaming consoles, as you said, clean energy, industrial automation. Like every single industry is being impacted by this semiconductor shortage. And I don't think it started with COVID. I think it started with the trade wars of 2018, 2019.
You could say it started from there, but it wasn't too big of a deal because the major manufacturer was TSMC, so they're Taiwan, so they're actually an ally of the States. But that leads to a very interesting point because now the U.S. and China are both putting a lot of resources towards being semiconductor independent. China is actually going to put something
into manufacturing as well.
Wait, sorry, who's that?
Intel.
Yes. I got to talk about them in a bit, but yeah, they're getting into manufacturing. But there's some interesting factors here. So there's a reason I want to short Intel. I was talking about that the other day, and it's because it's for twofold. One, they're building that new factory in Arizona, but they're using old technology. So when it comes to chips, there's these things called nanometers. There's basically the size of the chip and how much transistors you can put on the chip. And Intel is about a generation behind the Asian manufacturers, right? They're about a generation behind Samsung and TSMC. And so their new foundry is still using that old technology. So whether or not they can increase capacity, it's one thing, but I don't know how competitive their chips are going to be in the future. And I just want to show you some charts, Sam, if you can pull up my screen. I got a bunch of them. So these are good ones. So the new Apple, they're using the M1 chip, right? And the old Macs are using the Intel ones. So this is single core benchmarks. The Mac Mini, the MacBook Air, the Mac Pro, these M1 chips are like 40 to 50% better than the Intel chips. And they're cheaper, faster, and take less energy. Multi-core performance just the same. They're just blowing Intel out of the water, right? And even so here's the thing. Intel and AMD use an architecture called x86. So it's basically a programming language. The new Macs are using ARM. And so programs written for x86 don't run that well on Macs. So then the new MacBooks, they have to use this little translation software called Rosetta to translate the x86 programs to work on Macs. And even translating that code over, they still beat Intel. They take a 30% performance hit versus native apps, and they still beat Intel. So this is not good for Intel at all, right?
I want to ask you, how are you playing this?
Well, I don't want to short the stock because you don't know how high up it can go, but I do want to look into buying some puts, some long dated puts, because I think it's going to play out. So this is part of where China comes into play, right? Yeah, Intel's building the foundry, they're trying to update their technology, but the problem is, I think by the time they've caught up, they're going to be behind again because China's now going to be independent, chip independent, right? China's putting in 1.4 trillion to be chip independent by 2025, right? So that's gonna I think that's gonna put a damper on the demand for Intel chips, right? And there's another thing that's interesting too, and so I would actually go short Intel either by puts or the stock, but most likely puts, and I would go long Apple actually, and maybe even TSMC, and it's for this reason. Apple's chip, Sam, you can pull my screen. This is Apple's chip. What they've essentially done is put what used to be on a giant board. So this is an old Intel Mac, right? It's a giant board with these separate components. They've condensed all of that into one single chip. So the CPU, GPU, the RAM, everything is on one single chip, right? So what that allows for is massive efficiency in terms of size and power draw, right? So before, where you used to have a CPU and a GPU both using their own independent RAM, now the CPU and the GPU are sharing the RAM. So this is why Apple's programs are running faster, because before, if a CPU was going to process something that's better processed for a GPU, the CPU would take information from its RAM and copy it over to the GPU RAM, and then the GPU can run it. Now, because they're using shared memory, they both can access it at the same time. So it's just highly efficient. They've done a number of things to make their chip more and more efficient. And what they've also done is created all these tiny little chips that do only one job, right? So they have one chip just for HDR video. They have one chip just for GPU. They have one chip just for HDR imaging. So they have one single chip for one single purpose. And they can do this because they control the entire stack, right? They make the hardware, the software, they make everything. Now, the reason I say this is going to kill Intel, and maybe even the other companies, is because they can't copy this architecture, right? Because if you're an HP, you're not buying. So this whole thing is called a SoC. So it's a system on a chip, right? If you supply HP or Dell, right, and you're Intel, you can't copy this because Dell might have different needs than HP, right? In terms of RAM, in terms of what GPU to use, because Apple's all integrated, right? So I don't know what's going to happen in this industry, but I think it's going to make all these hardware manufacturers struggle to compete, because they can't make a chip as good as Apple's. And the reason Apple's is better is not just because of technology, but because of the integration, right? So Intel can't make an integrated chip and sell it because HP could say, well, we don't want that spec. Dell will say, we don't want that spec. Sony will say, we don't want that spec. So I don't know what your thoughts on that are, but this puts them in a hard spot.
For sure. Well, just semiconductors as a whole, I see a golden opportunity here. I've been bullish on semis for, I want to say, the past half decade. And I think just now is the time for semiconductors. I definitely think that if you were to create a portfolio of semis, that you would definitely have to throw Apple in there too. Keep in mind, NVIDIA's acquisition on ARM is going to be changing. I'm not sure if you have any thoughts on that, but I've been long Nvidia for a long time. It's one of my favorite companies in the universe. I'm not going to go too much into that one because the podcast would never end if I started to talk about that. But do you have any thoughts on Nvidia and ARM?
My only thought is I agree with you, and I put my money there too. I sized into Nvidia for the last 6 months since we've been talking, because my thoughts are the same. Like, I knew they were a good company, but I didn't know until I spoke to you, and then I looked at their fundamentals, their financials, and their outlook, and where they are in technology, and I didn't realize how far ahead they really were. And so, like, my money's with them. I did want to recommend a hidden gem, though. Not really hidden anymore, but Sam, if you can pull up my screen, this company's called ASML.
Oh, ASML, Dutch, I believe.
Yeah, and they're one of the biggest hidden secrets, not so hidden secrets in the semiconductor industry.
I like this company a lot.
Yeah, they look at what they've been doing. Like, they had like a 40x.
Mm-hmm.
Oh, 900%, 9x in like how many years? Oh. But anyway, these guys make
Nvidia too. If you pop up Nvidia's long-term chart, it's had just the same growth trajectory as well.
And the thing is, these guys are the key because all the semiconductor foundries use their equipment. They're the only ones that make it.
Mm-hmm.
Like, they're the supplier. And this equipment is so large that it takes an entire cargo plane to ship one. And they've only made 100 of them. So, like, these guys are the key. So I'm thinking of putting some money in these guys, actually, waiting for a pullback.
Yeah, the volume is pretty thin up there, eh? Like on the volume profile.
Well, if that's the monthly, it's just the start of the month, right?
Yeah.
Yeah, but even the past few months, that looks pretty thin to me, does it? Like, do you guys ever keep an eye on that when you're looking at like weekly charts and stuff like that, or is that not really much consideration?
Let me see.
It looks like it's going up over the last few months.
Yeah, it was higher last month. Like, it looks like it's stair stepping up since
But we're
December.
what? Like, how many trading days are we into April? Like 8 trading days? Not even.
Yeah.
Yeah. This month might end up somewhere around here. So
you do want to see the volume confirmed price. So I do agree with you, Kalen.
Yeah, I'm looking at the volume profile, like along the y-axis there on the right.
The other thing is, I would much rather enter a stock that's been consolidating for a period of time. Like, if you can pop up SOX, SOXX. So this is the semiconductor index. So when you buy this, you get a basket of all of the semiconductor stocks, including AMD and Nvidia. Yeah, well, you see those long upper wicks, though? Like, you have that morning star pattern. You got the high volume last month. It looks like it is testing that all-time high that it was testing. If that's a monthly chart, that would be what, like January, February?
Yeah.
Yeah.
So I feel like
January, February, March, April.
It is setting us up for a test of the all-time highs, and it's really strong, man. It closed the week at the high for the week. Like, that's really what you want. So I don't see this not opening up at higher levels tomorrow.
Oh, tomorrow's Monday. Yeah, that's right. I got some decisions to make tonight because I want to get into a couple of these after what I've been. I know after what I've been reading about semiconductors, I gotta get my.
Well, for full disclosure, I've been long SOX for years, and it's performed incredibly well, as you can see. And every single time it's pulled back, the pullbacks have been painful, but it's been a buy on a silver platter. It's been a great buy.
Is Intel in SOX though?
Intel is in SOX, yes. They all are.
See, I think that's why I would probably.
You'd love to have SOX X Intel, wouldn't you?
Yeah, I would love it. Absolutely. I'm just so bearish Intel right now. Yeah, okay. So here's another point, right? So on that technology thing, because I was saying that behind, even they admitted they're behind. In our last earnings report, they even said we're going to go to TSMC for our higher end chips, where we need the performance and the power savings, and we're going to create our own shittier chips and give it to everybody else. So I'm like, that's not a good look, right? So I don't know. Let me pull up Intel. Let me see what Caitlin thinks.
It's performed better the last couple of sessions, actually.
This is on the weekly. Oh! I did notice this before. It's on a huge cup and handle.
Oh wow!
Decades long. Yeah. So I mean, it could go. So this is the only thing. Looks like it could go either way, man. It could do like a crazy breakout.
I think this thing's going higher. However, I think it's going to have to probably test that horizontal support line like one more time.
Yeah, it looks like its all-time high was $75 back in 2000, just before the dot-com crash. Wow, it's basically traded 2 decades to get back to its all-time
Well,
highs.
if you can look at stocks again, because this will really put Intel into perspective. Stocks, but not with 2Xs, with 1X now. Perfect.
This one.
With 1X, just stocks, SOX.
Where is that? There we go.
It's an index. Perfect.
Yeah.
If you can go to the monthly and go back to 2000, it's the same exact thing. It's the same exact setup.
It broke out.
A few years lag. It broke out, had to test a couple of times and come back. But this is why I love semiconductors, because I always say, man, large consolidations lead to large breakouts. And this is what's happening with semiconductors right now. Semis are going a lot higher, man. If you believe in tech and you believe in the future, then you believe in semiconductors.
I believe it. So wouldn't this be a good bear case for Intel? Because seeing that the semiconductor industry broke out, what is this, back in 2018, it just killed it. What did they do? They did 100%, the entire industry, whereas Intel is still trying to break out the black cup. That's not good.
Well, that's really interesting, because you always want to be in the best stocks in any sector. So Intel seems like it's the laggard. Every semiconductor stock is breaking out. Intel's still below like a 22-year peak.
Yeah.
It'd be great is if that like broke out and had a big rejection. That's where I would jump in if I was shorting it.
I bet you the rejection is probably going to be around that $74, $75 area, that previous high.
Yeah. Like if it hits that and you get a good, like a big red candle back down, and if everything you're saying is holding true, then I would say that's pretty much game over.
Yeah, and you're looking at, we got a divergence on the RSI. I mean, it's the monthly, so it doesn't mean that much, but it's there.
Some bearish divergence there, eh?
Yeah.
Because it made a higher high. I can't see on your chart if that was in January or February, but still, what I would watch for is I would watch RSI. I would continue to watch that. If it makes a higher high here, then you may, for a short-term trade, want to go long.
Yeah. I think
$75, that's not a bad return.
Well, for me, it's still a fundamental, like the charts the technicals kind of point to what I was thinking about, but it's still a fundamental play to me, where it's like, we're thinking, they're like Volkswagen to me. They're like they're going on this huge press conference. They got a new CEO. They're trying to drive the stock up, build some excitement, but fundamentally, they still haven't solved any problems, right? So I think it's going to play out within 2 to 3 years, whether or not they've solved those problems. And from what my own research is saying is that they're not even close to solving it. And if by the time they do solve it, China will be chip independent, and TSMC will be even further ahead with their 5 and even smaller nanometer technology, where Intel's still using a 14 nanometer. So I just want to quickly explain it. So when you see chips, you see them being made in these wafers, right? They'll print them out, little chips in these wafers, and they'll chop them out. The smaller and more condensed you can make the transistors, the less wafers you use. So this is cheaper for manufacturers, right? So the smaller the technology, the more you can condense, the less it costs them to make a chip. On top of that, the more you can condense a transistor, the less energy it takes and the more efficient it is. And so think about the fact that TSMC is on 7 and Intel's on 14. They are a whole generation behind. And they're just starting to do their 10. And Apple's on a 5. So, like, it's not a good look.
It's not a good look at all, man. They're lagging completely.
Yeah. So that's my thoughts on that. But do you want to touch on the NFT thing real quick before we shut it down?
Perfect. So if we can start talking about NFTs, we can put out the article.
Sorry to bust your bubble. NFT prices slumped 70%. Sales of NFT linked to art dropped from 16.7 million to 12.5. But experts say it's not a permanent dip. All right, you're the expert on NFTs.
Okay, well, for those of you who do not know, NFTs is non-fungible tokens. And in simpler terms, it's a unique, verifiable asset that you can trade on the blockchain. If you still do not know what that is, because that is pretty complex, we can pop up Beeple's art that sold for $69 million.
But by the way, Beeple doesn't care about NFTs either, because I heard he transferred his money to cash like right away after that sale. So it was a cash grab.
So he's not holding Ether.
No, he's not. Right away, he transferred that money to cash.
So this piece of art sold at a Christie's auction, $69.3 million, which is astounding because it's not like a physical piece of art. It's essentially just a JPEG. And while like I may or may not be on board with that, you see art sell for prices all the time. It's nice to look at. Maybe it's one-on-one. It's niche. What really I cannot get on board with are these. So a lot of crypto speculators have been throwing their money. I know, it's ridiculous.
What is this?
Look at that guy. Look at number one and number two, March 11th. They sold for $7.5 million. This is like a mishmash of pixels that like a third grader could have made in Microsoft Paint. So I think that NFTs is a really, really dangerous buzzword. And I see this story play out time and time again. Like we can relate it to the tulip bulb mania in the Netherlands in the 1600s. We can relate it to like the Japanese asset bubble, or my favorite, the Beanie Babies. But I actually like the Beanie Babies more because the cost of production for these CryptoPunks is nothing. So if you're asking me, which would I rather invest in? Would I invest in CryptoPunks or Beanie Babies? I'm going Beanie Babies all the way.
Kaylin, do you have any comments on this shit before I rip it apart?
I have a lot of comments, but it's probably not very appropriate.
Listen, so I like the fact that NFTs exist, but they are completely being misused. What NFTs should really do is represent copyright.
Yes.
If you have a song, if you have works of art, if you have written copy, it should represent the copyright, and that copyright gets transferred digitally on a blockchain, secured, verifiable. It
makes no sense. Like, I could go on here right now and just screenshot this and crop it out.
I have a question for both of you though. Do you think that people that are investing in CryptoPunks think that they are actually worth anything, or do you think it's the greater fool theory?
Greater fool theory.
I don't know. I think everybody that's putting money in this right now is just really excited because they think it's the next big exciting thing and they have no idea what it is. Because everything I've seen, like since these things came out, I can't remember the companies. There's companies that like produce auto parts and they're saying, oh, we're selling NFTs now in a press release, and stock jumps up like 100%. It's the same thing that happened in 2017 with Bitcoin. Like, the past like 3-4 weeks, that's all you're seeing is like, a pharmaceutical company says, just they put NFT in a press release that's unrelated and stock jumps like 40%. Like
we saw that when we had the first crypto bubble in 2017, 2018, Long Island blockchain. Do you guys remember that one?
Yeah.
Yes.
What about Kodak?
Yes.
Sorry?
That's right.
What about Kodak? Eastman Kodak.
Yeah, Kodak. I remember.
I traded that one a lot. Yeah.
Oh, did you?
The problem with the greater fool theory, though, it's a game of hot potato. Eventually, the jig's up, the music stops, and if you're the one holding the bag, then you, my friend, are the greater fool, and shame on you.
Yeah. None of the ones that I've seen have lasted more than like a morning when they go up.
So there's a lot of fundamental issues with NFTs as well, right? So let's say, I'm hearing about some companies putting like digital assets like Pokemon, and Pokemon could be rare, Yu-Gi-Oh could be rare, whatever, right? And so they're natively digital assets. You attach them to an NFT, you make them rare. Okay, that's cool. But here's my problem. If you put that NFT on a blockchain, you have to tell me that blockchain will be here 10, 20, 30 years from now, right? You put it on some shit blockchain. I paid them $500,000 for a fucking Yu-Gi-Oh, and they shut down for whatever reason. I'm not cool with that, right? If you put NFTs on maybe Ethereum, but most likely if you could find a way to make it work with Bitcoin, I might put $500,000 into something,
So what do you guys think are the actual like long-term implications for these things though? Because like I know David, he said copyright and stuff, but like, if it's a song or something like that, you just copy, like we're doing that now. We're copywriting songs, we're copywriting artwork. I mean, it's already being done. So what's even the point in these things?
Well, for me, it's like if you put copyright on an NFT, it becomes much easier to track and transfer, right? So like, let's say you get a copyright for a song, right? Like, let's say you buy the Michael Jackson collection from, I don't know who owns it, whoever owns those records, right?
Yeah.
How many lawyers and how much paperwork do you have to sign? And then now you have to store that paperwork in a freaking vault, and you know what I mean? And then if you're going to sell to somebody, now you got to hire another lawyer company to verify those. So it's like a whole issue, right? Whereas if you actually have these things on a blockchain, it's trustless. Like that's the whole idea.
People are getting completely carried away with this.
Oh, yeah. Oh, 1,000%.
You could put anything on this, and you could.
And why does this always happen in the crypto sphere? Always, they get carried away with absolutely everything.
Remember Crypto Kitties?
And it's always retail holding the bag every single time.
Oh yeah, and it's always me holding the money.
Listen, this reminds me of that old saying where a fool and his money are soon to be parted. I have no problems with retail losing their shirts off this shit because you deserve
I have
it.
no problems. And you brought up Yu-Gi-Oh! And Pokemon. I haven't seen that yet, but I've seen it with NBA Top Shots, and apparently that thing is going down faster than it went up.
So here's my thing. When I saw that, what I thought it wasn't what it ended up being, because you buy the NFT and you got like a highlight reel of whatever, right? My thought was like, do I own the rights to that highlight reel? Does that mean every time ESPN plays that shit, they need to pay me a royalty? Because I would pay for that.
Not at all. You just own it on the blockchain. You own I don't understand it. Like you can search up like LeBron James dunk highlights on YouTube, and
that's my point. You don't actually own it.
Like YouTube to MP4. And really, what's the difference of you having ownership? And it's not like it's one of one. It's not like you own that clip. No, it's like, oh, you and 40,000 people own that too, but somehow it's worth like 25,000 or 250,000 each. So the market cap in the billions for this small clip. And let's be real, LeBron James is making highlights every night that he's playing. I know he's not playing now because he's out, but still.
Right, but my point is, it's not real ownership, right? I saw Kalen nod his head, and he's like, "Yeah, it makes sense if you own the rights to that clip."
Absolutely nothing.
Right,
yeah, that's what I mean. It's like if you own a song, right? You know, you own a song. Every time it plays on the radio, you get 2 cents or whatever. That would be very different.
Yeah.
or if you own one of these stupid little caricatures, you know, and every time somebody looked at it, you got a penny or something. Like that would be different.
Right. That's why, to Brandon's point, that's why, to Brandon's point, it is the greater fool theory, because it's not actually worth anything. Right? It's just what the next guy thinks, oh, it's valuable, that it is valuable, but there's no copyright to it. The copyright is the real value.
Mm-hmm. So that's why I think that a lot of these people don't necessarily believe in CryptoPunks. I mean, maybe some people do, but they still think, oh, maybe a year from now, there's going to be someone that's going to be even more enthusiastic about CryptoPunks, and he'll pay 1,000, 2,000, 5,000% more than I paid at a later date. And that's where he thinks that he's going to be running all the way to the bank with his money.
If that ever happens, I'm going to call Elon Musk myself and tell him to make me move to Mars.
Humankind is hopeless, man. If this is what we're doing here,
I'm coming with you, man. This is ridiculous. 8,000 plus in sales. 8,000 plus in sales. Oh wow, $296 million in sales.
Think about the people that are buying these things. Like I'm looking at some of these prices, like $7.5 million. I mean, these aren't just like retail guys on lower level. Like these are guys with big money. Like you got $7.5 million to like just instantly drop on a picture like this. You gotta be a pretty high up individual.
But back to my point, the cost to produce these are nothing. I'm sure they have some sort of like skew that they can just switch. Oh, I'm going to make the blue guy green and then put like a backwards cap on him smoking a cigarette. And that's another $7 or $8 million that you can print.
Look.
So it's essentially just like a never ending money printer. Like it just makes no sense to me.
The difference between the 1.5 million and the 1.8 million is a hat and a pair of sunglasses.
This is the best.
A cigarette and a bandana. Come on.
This is so great.
If it was just CryptoPunks, I'd be like, okay, it's like a niche thing. It's like, it's really popular these days. It's like Pet Rock or Pokemon, whatever. But there's like, I saw Bull Run Babes. I don't even want you to pop up Bull Run Babes. Crypto Kitties for years prior. Yeah, there's a lot of stuff that's not even appropriate enough for this conversation. But yeah, digital.
Already? Like, are these things already coming down?
Apparently, according to the article, like 70%. But these are big moves, man.
Yeah. They didn't last long. Like I was only seeing them in small caps for like, I want to say like maybe 3 weeks or like 3.5 weeks that people were really talking about them. Like it wasn't long, but they were squeezing.
Talking in August, I was like, hey, we have to find some way to profit on these NFTs. Yeah. And I was looking at like Engine Coin. They were doing the digital collectibles for the video games. And we were looking at some of the marketplaces like Rarible and OpenSea. But me and him sort of concluded that there's really no way to play it.
Right.
I think I'd rather play the companies that are like making these tokens and that are actually able to sell them for $7 or $8 million. But they know that their businesses are so valuable. They're not selling share in their businesses. They're just selling their worthless product.
Yeah.
Doesn't make any sense to me.
Like the only way for me to think about that's even safe to make money is if I was a VC and I was behind like this Larva Labs or something like that. But even then, it's risky. I think this has got 12 months on it tops.
It's just risky to your character. I mean, I think it's unethical to be selling these.
Well, I'm kind of a free market guy. You could sell, within reason. You can sell whatever you want to say. You can't sell a kidney, but you want to sell some digital pieces of shit. Like, go ahead. I'm not going to stop you.
Well, yeah, if there's someone that's willing to pay whatever price for it, then
Yeah.
sure. But I think it all goes back to the greater flow theory. And there's obviously a lot of stupid people out there that are just throwing their dollar bills at anything that is playing to these trends that are in vogue.
Yeah, so I think we should end it on a caution where I was alluding to. I think we've talked about this before, where I think this either DeFi or NFT. I think this is going to end up being the 2000 internet.com bubble, and it's going to leave a lot of people in a lot of bad place.
Yeah.
Yeah.
Well, you were telling me this last time, and me and you just completely agreed on this when we said just because someone tells you something is good, just because it's going to go up in value for no other reason, that's when you have to be skeptical about it. You have to push back, do your own research. That way you'll have no one else to blame but yourself.
Yeah. I think a lot of people just don't do that though, because they're, they don't know anything about the markets, and somebody tells them to buy something and they know they trade, they just listen to them. But
Yeah, I know it's a share it's one of the bad things that came out of social, right? You could really transfer information really, really quickly, like disseminate information, right? You make a few bucks on an NFT, you can message like 100 of your friends, like, hey, get in on this thing.
yeah.
I'm making a ton of money. It's so bad.
Yeah.
All right, guys. Thank you for watching. Thanks. Awesome discussion. Tune in next week.
A lot of fun, guys. Looking forward to next week. Hope you all enjoyed.
All right. Good luck moving, Kaylin.
Thanks.